Hi, I'm Shakeen Tawahena, Deputy Editor and Commercial Editor of Mortgage Solutions and Specialist Lending Solutions. In this video debate series, in partnership with Together, we'll explore some of the opportunities to be found in the specialist lending market and how advisors can make the most of these through partnerships across the sector. I'm joined by Nick Parker, Head of Networks and Covers at Together, Rachel Geddes, Strategic Partnerships Director at Mortgage Advice Bureau, and Andrew Cappaert, Group Head of National Accounts at Brightstar Financial. Thank you all for being part of this discussion. In this video, we will cover the current landscape of the buy-to-let market and how it is coping with what might be on the horizon. So, Nick, I'll come to you first. What is the mood of the buy-to-let market currently?
Look, I mean, landlords have faced numerous challenges over the past few years, announced from the government on stamp duty, the renters' rights bill, EPC regulations. They pose a whole new set of issues. Um, if you speak to lenders and distributors across the market, the indication is to expect lower buy-to-let volumes, certainly in the short term. And our recent commercial study shows signs pointing to a lot of the smaller amateur landlords even, um, exiting the market. That said, our own lending in 2024 actually increased by 16% to 2.2 billion, which would suggest some resilience in the sector, as diversification and interest in higher yield properties such as HMO, student accommodation has started to grow.
And Rachel, so it sounds like things are resilient at the moment, but how might broader market changes, such as regulation, affect this?
Yeah, so there's always that fear of the unknown, what's going to come next. The private rental sector has been affected and hit probably the most over the last decade or so regarding changes and impacts. So we have to always be aware of it more than anything. So what might change is obviously we've got the renters right bill at the moment. What's going to happen there? What we're also going to see from sustainability regarding getting to this net zero and things like this. These are all things we have to be actually having a conversation with our clients about today. Whether they're happening right now or not is really looking at what our landlords are looking to do with their portfolios and where they want to grow it. So it's again, brokers have to be aware of themselves. They can't hide away from it. They have to be keep themselves up to date with what's going on, what the conversations are that are being had out there in the market, and then have those conversations with their clients. We are a resilient market though. So regardless of what's happened in the past, we're still here.
And Andrew, in your view, what can advisors do? Like, what sources can they draw from to help buy-to-let clients when it comes to adjusting to these possible changes?
I think once again we go back to, as Rachel just touched on, we are resilient. We're kind of getting through hopefully the trickiest time that we've had recently with buy-to-let. And once again, it does create opportunity again because people need advisors more. And I think where the advisors really come to the front is, to educate their clients. Is to we go back to that educate word again. As long as people have knowledge, they can make decisions. And I feel once they have the knowledge on educating on how to do something, and should they restructure? Do they know HMOs? Do they know, putting things into SPVs and limited companies? All those sort of things comes from educating the client. Now, where we come into it is to educate the broker. And that's where the lenders come into it. And that's where, the role that Rachel's got is educating people to say, look, there is opportunity there. So we need to make sure that whenever we are talking to people and we can quite easily be really down about the buy-to-let market, but I'm always seeing green shoots. I'm a very positive person. So I always see how much better it is this year than it was last year. The year before, I remember a couple of years ago, we was having people here taking out bridges to buy something on a buy to let because the rate on the bridge was better than the buy to let, and I was going to keep that for a few months. And it was, so crikey, are we in a better place now? Yes, we are. We are in a better place, and so I think it is a matter of staying positive with your client. If you're a broker, it's a case of if you don't understand something, give somebody a call who can help you.
And Nick, so a recent report from Together did show that demand for student accommodation, office space, and retail development was fueling a shift in trends in the commercial property market. So, what in other indicators might there be to show that this landscape is shifting, and how might that impact the broader buy-to-let sector?
There is a growing demand. We've talked about it already a couple of times now about sort of like student accommodation, the opportunities for office blocks and that type of thing. Not just in terms of the being able to rent them out as going concerns, but actually to convert them and turn them into student accommodation, because students now, I think, are increasingly demanding over what they expect to have within certain certain sort of facilities local to them, and more of them are looking more towards these self-contained buildings that have got the gym in there. They've got a little corner shop or something that they can nip down to. And, we seem to live more insular lifestyles now, I think. Certainly converting office blocks into into facilities to attract student accommodation, that type of thing, is certainly growing of interest. But it's not just about the type of property. What we're seeing is a shift towards, or a migration northwards. So it's looking for opportunities to invest in rental property and in student accommodation, but further outside of London and the southeast. And certainly some big cities are attracting that kind of investment. Birmingham, Liverpool, Manchester, Glasgow, wherever you've got some big or lots of university choice, you're going to see some growth in an investment in those kind of areas, largely because more and more people are diversifying their portfolios and wanting to get into that sort of cohabitual style of investment property, because the yields there are much more attractive. I mean, if we take Birmingham as a really good example, it's a city with loads to offer. The UK's second largest city. Is young, dynamic, diverse population, opening up lots of opportunities for property investors to diversify. They've got 47% of households are renting in that area. And that accounts for about almost 200,000 rental properties across that area. The costs are lower than the southeast. The yields are pretty strong, and it's going to be a very, very popular area to look at. And you could also then sort of move into where are the sort of like the entrepreneurial growth areas. And those entrepreneurial growths is like Bristol, for example. Bristol's very, very attractive for entrepreneurial people looking to sort of like, it's a real sort of growth industry there. But they may be more inclined to rent, but especially as they sort of go and they start to grow their businesses, and a lot of sort of fintechs will probably get born out of that area as well. Huge opportunity to invest in business, to invest in buy-to-let investment properties, but all outside of that London area.
And Andrew, Nick spoke a bit about the diversification that buy-to-let borrowers might be going through in terms of the kind of properties that they look at, even that kind of areas. So any brokers who might find this complicated and hard to keep on top of, how can working with a packager help?
The best thing that we can do is simplify the process, ultimately. All those things that Nick just spoke about, there's so much opportunity, but that can put the fear factor in people, because they can't see the wood for the trees. They just see this massive opportunity and don't know where to start. And I think that's where we can help brokers is to, with that process, come to us with what the proposal is. We can have a look at that. We can look at the restructuring. Should that be an HMO? Should it be an MUFB? Should it be, can you increase your portfolio? Can you do all those things? If you spot the opportunity, speak to the experts, and we can help that. And the more you speak to us, the more the brokers will get to understand it as well. And eventually they won't need to speak to us. And going back onto one of the other big problems that we have, everyone, is time. Portfolio landlords, their mortgages it's not so much they're difficult. It's that if you've got a portfolio, if you're a broker with a client who's got a 52 property portfolio, the time to do that is just, do you ignore everything else that's on your desk? So that's where we can really become that kind of support for, even with cases that a broker can place, is that if it's going to be very time consuming, let us look after it for you. So I think that's really important. And also as well, in terms of simplifying the process, when working alongside us, is that we, the clues on the tin, we package the deal up for the lender, and we have, we placed £1.5 billion worth of applications last year across the group. So lenders trust us. And so when we send something across, they know we're not just sending stuff willy-nilly. It's coming across, and it's going to be in a nice little package with a bow on top. And that's ideally how we do that. So, Yeah, we've got loads of bows and packaging downstairs in our case management team.
And to Rachel, so even when it comes to a broker where it just might be not be their area, how do they keep on top of these trends? Just to maybe be aware of it, maybe review to work with a packager in the future, maybe review to get into it themselves. How do you keep on top of it? Where do they look to find out the information? And also how might a network like MAB helps with that support?
Absolutely. So MAB's very much about enabling brokers to do as much as they want to do. However, if it's not their bag, that's absolutely fine. Have the specialist. So that might be that they have a specialist in their team that just looks after things like portfolio landlords or HMOs. We obviously have partnered with Brightstar, so we utilize their services a lot. Exactly for that reason is a broker's job is difficult. I'm not saying anybody else's call on the call's job isn't difficult. However, brokers spinning lots of plates. They are looking at every single kind of client that comes into their offices, over their phone, into their email box. They're also working in our basis over 90 UK lenders. That's a lot of criteria, a lot of products to know, and a lot of circumstances to try and figure out. So for our brokers, we very much give them all the tools to be able to, whether it's self-educate, find the solutions, simply have these incredible lenders like together on our panel so that we have those solutions available. However, in the occasions where they just don't feel comfortable, confident doing it, or like Andrew said, have the time to do it, then we want to make sure that we still have that offering where we send it to a packager like Brightstar to be able to assist. At the end of the day, it's the consumer outcome that is the most important thing. What we don't want to be doing is saying no to a consumer because we aren't comfortable with that, we aren't confident, or God forbid, we don't have time to do it. Because guess what? Somebody else will. We want to make sure that we aren't actually saying no to a client. That's our big goal. We don't want to be saying no to a client.
Thank you all. And that is all that we have time for this part. Thank you for the insightful discussion. I imagine that those watching it found it useful and lovely again to have you with us. And I hope you join us for the next and final part of this debate. Goodbye.